Hello, everybody, and thank you for joining the FX Open Breakfast with London Open Breakfast, actually, with myself, Kathleen Brooks, on the 30th of May, which is a Wednesday. An interesting start to the session. What we've basically seen since Monday is an overall negative tone to risk. We haven't seen outright capitulation. We've kind of felt way more like we saw that at the end of last week, but what we've seen instead is a more of a meander lower, which is kind of what we'd been expecting. But we're going to take a quick look at just a few things, just to introduce you to kind of things to look at, because obviously there is tons of noise out there. Right now we're having to deal with rumors about China stimulating its economy or stimulating the global economy. Added to that, there's also issues with that is also, we're also talking about what's going on in Spain and recapitalize its bank sector, and the fact that it may not be able to. The other thing, or may not be able to do it in the way that it wanted to. The other thing that we need to talk about as well is just kind of what's going on with the economic data front, the fact that we've got non-farm payrolls coming up on Friday. That's always a really important one, and definitely is worth looking at. Let's take just a quick look at some of the charts first, because what we've seen today, it's been some kind of interesting price action. Bear with me one moment. I'm just going to pull this chart up. Right, so this is just, oh, hang on. Can you see that? Oh, bear with me one moment. I might need to just change that again. Right, hopefully you can see this now. This is euro dollar. It's a really short-term chart, just 30 minutes. But the reason why I show it to you is because it really does, at the moment it's kind of all these, now that we've kind of broken below 125, which we did at the very end of the UK session, after the markets closed actually yesterday, the big thing to question now is, well, where do we go from here? Now, the problem with euro at the moment is that a lot of people are a bit concerned, slightly concerned, because, it's fallen so far already. I mean, it's down like 5% over this month. It's, CFT or positioning data shows that there's a potential that these positions are quite stretched to the downside, and usually when the market is all one way, we can see a pullback in the opposite direction. So a lot of people are a bit worried about going short here, because they're like, no, what happens if there's a pullback? What happens if the market is too short and everyone's short already, and all of a sudden there's a good headline and things come out? I think that's kind of a good point. And, in that sense, to be a responsible trader with a good risk-reward ratio, you need to not enter now. You need to wait for a pullback. Essentially, pullbacks do happen. It's just about the timing of them. And also being able to determine kind of when they'll happen, how deep they'll be, that type of thing. So looking at a chart like this, so what you can see is this is just a 30-minute chart, so really, really short-term chart. In fact, I'm actually going to go on to the hourly, because I think the hourly is the best chart to use to actually determine where we can get kind of pullback. So, right, this chart goes back, let's say the 28th, so that was from Friday, so it's from Monday, sorry. So all of this is price action this week. So as you can see, price action has fallen. There have been some pullbacks for sure, right? We got one here. We got another one at the initial kind of the first half of the morning, testing above 126. But again, kind of tweezed the top there. So 126 now, really nice top. Adding to that, 125.60 is another one, so just above 125. This is an interesting candlestick pattern actually, because what we have is a bullish engulfing candle. Because what we don't have, is a bearish engulfing candlestick on the way down. So we had a big push from the bulls to get above 125.50, but then totally faltered. So it does suggest that there is a lot of resting supply, and people are really selling into strength, into euro strength. Now, people have been saying that for years and years and years, that, throughout the whole of this crisis, it's like, okay, fine, a pullback, people will sell on strength. Well, they didn't. That's why euro was so well supported, and that's why the euro was so resilient. Instead, what we're seeing now is that. So this is the drop. In fact, I'll show you there. Here, this is the drop that we saw yesterday, or this is kind of yesterday's price action, which I'll just kind of briefly discuss with you. So we've gone above kind of 126.60, hit a bit of a resistance level there. Major rejection of that level, kind of gapped lower almost, only a tiny bit of a gap. Then kind of moved sideways, didn't really know what to make of life below 125.50. And then, of course, we've got that news that Spain have been downgraded by Egan-Jones, which is a bit of a, I guess, a second tier rating agency, but it's certainly developing a name for itself, and is developing a name for having much more realistic ratings than some of the other more developed or more long-term, more historically important credit rating agencies like your Dow Jones, S&P, that type of thing. And that is what caused this huge move lower. So as you can see, as I always say, any kind of long shadows, do watch out for. So obviously we had this, enormous move lower towards kind of 124.50. Again, long shadow, suggests that 124.50 is a really nice, a really nice kind of bottom there, so a really nice short-term support level. This morning, as we come in, as you can see, so basically what the hourly chart is telling us is that we really are kind of at the bottom. This is really, really good support. We could hold off. We could actually stay kind of bouncing around. Kind of 124.58 has been the low today. We know that 124 kind of 60 is a low. We know 124.50 is going to be a level that the market will respect. You may not choose to enter here. You may rather choose to enter on some sort of bounce. So the idea is, well, where could that bounce be? Well, we know that 125 is an enormous level. It may not get up there. It might be 124.90. It might be this kind of cluster of hourly SMAs here, which comes in at kind of 125.35. That's quite a long way from where we are. You're looking at a 60-pip move to the upside. However, I think because right now we're not making any lower lows. That's what I'm a bit worried about. Just on a very short-term basis, I believe that a pullback is possibly going to take place. I mean, we've seen a little bit of one up here towards kind of 125. We're not making any lower lows. We are kind of rejecting the top here at kind of 124.90-ish. We're currently trading around 124.70. If we were to get back to 125.05, I would probably look to sell there on a very short-term trade. Purely because, again, as you can see, you've got to be kind of quite technical about this here. There's two reasons. There are kind of two reasons. You always want a couple of reasons why you do this, or why you're going to, why you're going to enter a trade, why you're going to wait, and why you expect there to be a pullback, for example. Because obviously, the idea is always to be making profits, not to be losing profits. So what I can see here is that there's a couple of reasons why I would wait. The first thing is that we've got some economic data out at 10 o'clock, so we've got a bit of time. We've also got an Italian debt auction, long-term debt auction at 10 o'clock. So 10 o'clock is a really important time. That's 2 hours away. We could have a bit of a pullback leading up to those events. The reason being is that obviously a failed auction could go pretty badly. But until then, we haven't had a failed auction, so we certainly haven't had a failed auction yet. So the market's not going to kind of price in anything yet until we actually know what's going on. The other thing I would point out is that just on this hourly basis, it looks just like the MACD line. So the pink line here is crossing above the signal line, which is a bullish sign on a short-term basis. We have a moving average here at kind of 124.90-ish, which could thwart the short-term bulls. But we've got a really nice bottom in there. MACD, no economic data out, does suggest that there's kind of a lot. Does suggest that we are doing quite a bit here. This is again, as I said, 124.50, we're going to watch to see if that holds. Now, it is testing kind of around that now. But again, so there's three things here. As I said, number one is the economic data coming out at 10. Number two, the MACD. And number three, the series of higher lows. However, if any of those get breached, then it just says, well, reassess what you're thinking, change what you're thinking. Maybe that's not going to be the case. However, for now, I would wait to buy the pullback purely because we kind of are at the bottom of, we're at the lows of the week so far. and you probably don't want to be buying here. Some people may want to. That could also thwart a little bit of upside as well. But we do have to watch out, and we do know in the past that one stray headline has caused euro to fall. And the trouble is sometimes when you see it falling, you think, oh goodness, I'd love to get in. I'm missing out on profit opportunity. It's only going to go down. Well, listen, nothing goes down in a straight line. So I think the best lesson right now, when some people say to me, I'm a bit too scared to get into euro, I totally understand that feeling. I think that's a very normal feeling. So I would probably think about, waiting for a pullback. What we do know is that there could potentially be a little bit more selling pressure this morning because we do know that Spanish bond yields above 6.5%. Let's take a quick look at sterling as well, because sterling has been absolutely sold straight through 156. This is the hourly chart. As you can see, it's really coming off very, very hard. It's moving into over sold territory, actually. So do beware a bit of a pullback there. Some key levels to watch out for. I'm just going to draw a bit of a line on here just to show you. I mean, a really nice downtrend. 156 now acting as massive resistance. 157, 155.70. Let's look at a slightly longer time frame because, as you can see, at our lowest level since December 2012. There is further to go because obviously in November we had fallen, in January we had fallen all the way down below 153 before recovering. We've obviously had a very sharp downtrend already. We had a bit of a pullback yesterday, not too much. Pullbacks have been fairly shallow, so that's another thing. So if you are looking at trading pullbacks, they do tend to be fairly shallow. The best thing to do when trading pullbacks is for example, in euro dollar, we identified our support level as 124.50. As long as that holds, it suggests that it could potentially bounce a little bit higher, and that could be a good entry point for you to go short. Let's take, doing this actually for cable. You could possibly argue that 155.50 could potentially act as that. Let's go into the daily. So as you can see, it is kind of testing around 155.70. It's coming back a little bit around there. So that 155.50 to 70 zone looks like it could potentially be good support, and that people may actually try that it may pull back potentially even back to this kind of 156 area. 156 we expect to be quite sticky because it is a whole number. But in the current environment, we think probably the only way is lower really for sterling. There's some money supply data out of the UK today. That's kind of only really looked at by the very kind of sophisticated end of the market, I suppose. But the reason why it's still important to know about, and it's not that sophisticated really. I think the money supply is an important one to look at. It will be an important one to look at because obviously it's been falling quite sharply and is at some of its lowest levels years and years. And when that happens, it suggests that there is more room for the Bank of England to do more stimulus. What does that mean for sterling? Well, that tends to be negative for sterling. So do watch out for that there. Again, as I said, we are in very we have got a very treacherous fundamental backdrop at the moment, which is obviously the news about Spain, news that China's not going to be forthcoming, signs that the Eurozone authorities aren't going to be too forthcoming. And really, I mean, what a difference a week makes. Just right now, 10-year Spanish bond yields versus German bond yields, the spread has reached its highest ever level, highest Euro area level. And what is so important, what's so important about this is that, a week ago it was all about Greece. Well, today it's all about Spain, and Spain is a much bigger problem than Greece. So, fundamental backdrop is very, very weak. Added to that, we've also got, the technical backdrop. We've got Spanish bond yields above 6.5% today. We've got euro dollar below 125. Again, these kind of key numbers are really important. So, as we said yesterday, below 124.70 in euro dollar is fairly ugly and really opens the way to kind of a 121.70 move. So cable is obviously moving in the same direction, but again, as I said, things don't always go in a pullback. We've identified a couple of resistance of support levels: 124.50 in euro dollar, 155.50 in cable, and just it's worth checking to see if they hold. The other thing I want to show you now is euro yen. Euro yen has obviously come under tremendous selling pressure, below 99 now, fell below 99 yesterday, and is really kind of incredibly weak looking, really. Just bear with me one moment. There is some support around this 98. There was support, around 98, 99. It looks like we're going through that now, testing that at 98.80. Below there really opens the way to kind of 97. So let's take a look here at the, right now we're kind of down, all the way down at this level. It's kind of 97.04 level, which is the low from January. So we're getting very, very close to there. The market is going to start looking at the moment and thinking, hang on a minute, are we going to start, what's going to happen? Once we cross these we've already crossed it actually in euro dollar, but, in some of the other markets, once we cross these major support levels, are we going to be in oversold territory? Are we going to be, are we going to need to see something else? Are we going to be at that point kind of ready for a turnaround? Is everything going to be sorted out? Well, yes, there are many reasons. You can see this is on the daily chart, looking really, really oversold. Likewise on the hourly, again, pointing lower. However, this isn't normal times. Just bear with me one moment. I just got to you guys. These aren't normal times. So, one straight headline can really cause things to continue to move. But as I said, always keep your risk-reward ratio well. Always keep that healthy. Don't sacrifice that because you're nervous that you're not going to jump in at the right time. Wait for pullbacks. We still think that the trajectory for the euro is lower, but just wait for a pullback. 90 now. If we get through 98, 80-ish, we may see a pullback towards that 98.90, which I mentioned to you was a major support level on the way down. Remember always, how you kind of keep your profits, how you maximize your profits is to get in at the best levels. Don't just jump in. Wait for that opportunity. Wait for kind of pullbacks, and use pullbacks as the greatest opportunity ever. So as I said, with pullbacks, you always need to look for your support levels, but also your resistance levels. That's obviously your entry levels, which tend then to be your resistance levels. So on a very short-term basis, what we have seen is that pullbacks have been very shallow. So, a pullback of kind of 20, 30 pips may be enough for you to get in, especially if you're kind of a short-term trader. Okay, someone has waited very patiently to talk about Aussie. I am going to. Just bear with me one moment. I'm going to take a sip of water. Sorry, there's absolutely tons of news coming out. One thing that we are hearing from our own sources is that there is a very good amount of euro bids ahead of 124.50. So again, that could really protect that 124.50 level. Just some kind of market information. Sometimes it's right, sometimes it's not. So this is Aussie. So as you can see, Aussie has been absolutely hammered. It was hammered on the back of some much weaker retail sales data this evening, and that came out, overnight our time. Now, as you can see, it did try and retest 98. So it did try and stage a recovery. It was pretty short-lived. We saw, that there is very good resistance above 98.05 now. But obviously this kind of dip in sentiment, this surge in Spanish bond yields is really weighing on risk overall. 97.70 is very, very good support, ahead of 97.50. Starting to look really, really oversold on a short-term basis. Likewise with the hourly. The hourly is kind of pointing lower. That does suggest there's a bit more room in the hourly, but because the 30-minute is so in such oversold territory, it does suggest that potentially what we could do is just pull back a little bit before moving forward again. Okay. Again, on the daily, starting to tick upwards a little bit. Obviously, we had fallen to those lows last week below 97. Didn't like it down there. It's since moved higher. So right now holding fairly good support, but again, 97.70, massive support level on the daily chart. The low here certainly could open the way back to a move towards 97. Okay, let's also take a look at gold, because gold has been particularly interesting. Interestingly enough, it seems like Spain, the Spanish Prime Minister Rajoy has called for the EU to help debt sustainability in Spain. It'll be interesting to see how they, whether or not the market takes that as a bit like a kind of a backdoor approach for a bailout. That's what it certainly sounds like. We're getting, the markets are absolutely treating it as such. We do know that insurance on Spanish 10-year or 5-year debt, or the cost to insure Spanish debt from default has just surged to another record today. So lots coming out as we have this, which is quite kind of interesting because we can see things moving in real time. And that's kind of how the market has reacted. I think it's really good to have had the experience today whereby we've been looking at markets and then markets have kind of reacted to news as it comes out, because it just shows you how sensitive the markets are right now. They are incredibly sensitive. They are reacting. The technicals may be going one way, the technicals may be looking oversold, but you know what? If there's a good fundamental reason or a stray headline or something to sell risk, then they are absolutely doing it. They're not counting their chickens. Cash is king at the moment, and that's the key thing. Right, so with Aussie, so as I said, testing really key support here. A bounce higher, we may see back towards kind of that 98.20 level, maybe even 98.50 in the short term. But again, below 97.70, there isn't really much in the way between there and 97. Someone just asked how much fundamental news will affect the euro-dollar trend. Well, as I said, the euro-dollar trend is lower. So, and the fundamental backdrop completely supports that a downtrend in euro-dollar. In fact, as I said today, we've been seeing, we've seen kind of weakness in euro-dollar at the open, largely due to kind of news out of Spain about recapitalizing its banking sector, and now with the Prime Minister kind of asking the EU for some sort of help. However, the markets are even willing to ignore some technical signals. So even though, for example, a major technical signal that some people look at anyway is the commitment of traders report. So it's about how many short positions there are in, short positions there are being held in euro. And we do know that they're at kind of euro era records, but that hasn't stopped, further selling pressure, because obviously the fundamentals are king essentially. Even when you have, a good technical reason for a pullback, it may not happen. Or for kind of a turn in a trend, it may not happen. And so even though we do believe, as I said, we do believe that there will be pullbacks, we do think the pullbacks should certainly be sold into, the overall picture for me is still negative, and the fundamentals certainly support that. So I think it's something like euro-dollar. I think that's having a huge effect right now. But it's also ricocheting across other markets as well. So when we kind of get into crisis mode, which we're in a bit now, just bear with me. I just want to show you another chart. I want to show you gold because commodities have been super important this time round. Okay, cool. Right. I know there's no chart, but there is one now. I was just pulling it up. Right, so this is gold. Gold has been, absolutely kind of hammered. Interestingly enough, though, it has found a bit of a bottom here around the 1530 area. 1530 is a kind of it's an important zone. It's obviously, just ahead of that 1500 mark, which was the low from kind of the end of last year. It is really an important level, and we are finding some good support ahead of it. There is some good resistance there at 1566, which is the Tankan line on the Ichimoku cloud for gold. The reason why I mentioned gold is that the commodity space actually moved first. So it sold off. It reached its peak in March, and since then kind of sold off quite sharply. Remember, back in March, euro-dollar, for example, was trading sideways. So commodities, including gold, led the markets lower earlier this year. So when the sell-off started, they were led by commodities. And what's interesting is that they, yesterday, before that big sell-off in the euro, we saw gold move first. So what gold is doing, what oil is doing, is really important for other asset classes. So, for example, if we see stabilization here, so we're currently trading around 1550-ish. If we see some stabilization around 1550, maybe even a pullback to that 1566 zone, then, that could also be very positive for euro dollar. So one thing I would say is that, yes, we've had a big sharp drop at the open, but it does look actually like euro dollar is, like the gold price is actually stabilizing just a little bit, which is important, which is very important to see, purely because it's been such a great lead indicator before. Why is that? Some people have asked me, well, why do commodities move first? Well, they do move first sometimes because they're expensive positions to hold, for traders to hold, so sometimes they sell them off to reduce exposure generally. And that can obviously have a deep impact on the gold price. Of course, it can. Also, they're priced in dollars, so they tend to get jostled around by that. But the positioning does have a lot to do with this. So that's kind of gold. I'm happy to take a couple of questions before I go. Literally, we've got kind of about 3 minutes left. If anyone is particularly looking at anything, but overall, lots of jitteriness. It's all about looking for those pullbacks. Again, a pullback in gold to around that 1566 level might be a good selling zone if you are looking at gold, because it is the 10-can line of the chart. Above there opens the way to kind of 1582, there or thereabouts. Someone's just asked for dollar yen up or down. I would say probably down. Just bear with me. I'll just show the chart. The reason being, all right, here we go. Let's just put yen up. The reason being that the Bank of Japan have come out and said, yes, they will do more stimulus, but only if things blow up in Europe. So you've got two things there supporting the yen. The yen is your ultimate safe haven traditionally in the FX world. Secondly, you've also got the fact that they probably won't do more stimulus unless things kind of move or happen in Europe, like Spain needs a bailout, which may happen indeed. So hence, this is the hourly chart. We've seen this massive drop. Now, one thing I would say, we did approach kind of below 1730 yesterday, and in the last couple of days, we kind of test around that 1730 zone, and the markets didn't like it. So 79 is an absolute key level, as is 79.20. So we may see a little bit more downside to come. However, it'll be interesting to see how much the Japanese stick to their guns. So just because the Bank of Japan have said they're not doing any more, the Ministry of Finance, the Vice Finance Minister in Japan, came out yesterday and said that they're watching the FX markets very closely. So the closer we get to 79, the more likely it is that things will take place. So someone's just asked me how I set up my 3 moving averages. You can actually do them quite easily. So in a chart like this, for example, you just do moving average wherever it is. In one of these, anyway. It's just generally in your studies, you can put on moving averages. Oh, there it is. So you just click on something like moving average, and you can add, you can delete, you can edit, and you can recolor them and that type of thing. So they're always fairly easy. Someone has just asked another question that the low price of gold helps Greece in its debt. I don't know. I don't necessarily think so. Not for Greeks who are holding gold instead of euros. It's not. Obviously, they want gold to be a higher price, surely. Someone's also said, is it all about Spain now? Absolutely. That's a much more, it's got to a much more kind of critical stage in this crisis. We're going to need some big action from the central bank, but I will leave you with one chart, and let's see where this is going. Just bear with me one moment. I just need to pull it up. Okay. Volatility in the euro-dollar 6-month at-the-money option. As you can see, not nearly as high as it was back in September, October. Instead, what we've got is moving higher today, but it's kind of midway. It's obviously broken out of its range, but it's still not as high as it was earlier this month. So, right now volatility is still fairly subdued, even though price action doesn't seem to kind of show that. But it suggests more of a meander lower, and which is kind of good news for those people who aren't on the back of the euro-dollar short trade already and want to be. Purely because if volatility is low, it means that there could be pullbacks, which means that you could enter at better levels. Okay. Someone just said that they do I use 50, 100, and 200 days for moving averages. I actually use 21, 55, 100, and 200. That's just mine, but yeah, 50, 100, and 200 are perfect. Okay, everyone, thanks so much for joining. Please do join me on Friday. And, who knows, maybe Spain will be bailed out by then. Maybe Spain, maybe everything will be fine. Maybe the ECB will come in, or Germany will have agreed to Eurobonds. We will have to see. But right now, kind of everything's on the cards. We're in uncertain times, that's for sure. And when we're in uncertain times, it's just that risk will be sold off during intervals anyway. Okay, everyone, thanks so much.